Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's get across what we saw overnight on global markets, rising to new record highs, buoyed by the Federal Reserve's interest rate cut. Wall Street's main indices posting new closing highs a day after the Fed resumed its cutting cycle, with investors encouraged by the prospects of more cuts to come. The SmallCap Russell 2000 index notching its first record high close since last November. Well, the market gains were again led by the mega-cap tech stocks, with Nvidia recovering losses from the previous session when a report indicated that Chinese tech firms might stop buying its chips. Intel notched its biggest daily gain since 1987, jumping 23% after Nvidia said it would invest $5 billion in the struggling US chip maker. Pure Advanced Micro Devices, it slipped. CrowdStrike shares surged after at least 9 brokerages raised their price target on the stock. FedEx reported a higher quarterly profit, but forecast 2026 earnings per share largely below analyst estimates, anticipating a hit from the US decision to end tariff exemptions on low value to direct consumer shipments. Shares were up about 6% in extended trade. And software giant Atlassian has sealed its biggest acquisition, paying $1 billion to buy US software firm DX in a deal it says will help cement it as a leading player in the AI era. Well, the UK has secured record levels of US investment off the back of President Trump's second state visit to the country. The US president committing more than $200 billion of corporate investment in the UK's technology, finance and energy sectors. Meanwhile, the Bank of England has kept its main interest rate on hold at 4% as expected after August's quarter percentage point cut, and it slowed the pace of its program to run down its government bond stockpile. Whereas Norway's central bank delivered a 25 basis point cut to 4%. In the US, the number of Americans filing new applications for unemployment benefits fell last week, reversing the prior week's jump, but the labour market has softened as both demand for supply and of workers have diminished. US Treasury yields advanced, with the yield on the US 10-year up more than 3 basis points to 4.1%, the 2-year at 3.57%. And the US dollar index is up around 0.5% on the day. The Aussie dollar having fallen back to 66.2 US cents. And Bitcoin is trading at around 117,000 US dollars. Oil prices have eased as traders remain concerned about the US economic outlook. That's despite the Fed's rate cut. Brent crude futures falling almost 1% to $67 a barrel. Copper was off more than 0.5%. A similar margin also for iron ore, falling to $105 US dollars a tonne. And the gold price has fallen amid profit taking after recent record highs, with the spot price slipping to $3,644 an ounce. We'll get across what we're seeing with the focus on US equities in the wake of the Fed rate cut and, of course, those equity moves. I caught up with Brad Gastwirth from Circular Technology.
Yeah, I mean, it was pretty well priced in that we'd see that quarter basis cut there. I mean, now the big question is, are we going to get some more? The Fed basically signaled that we're likely going to see a couple more cuts this year. You know, will we get 2 more? I think we'll get 1 more for sure. I think 2 might be just a little bit more than what I think the market needs. But ultimately, I think it was very well anticipated. I think that's part of the reaction. I don't think this was much of a surprise at all, Andrew.
All right, now I know you have a focus on gold in particular. Is this what you've seen from the Fed and what's likely to come? Does that reinforce your view on gold?
Yeah, I mean, I sound like a broken record on your program. I think gold is a must-owned asset across, everybody's portfolio. It's a great hedge out there. If you look at what's going on with inflation, it's a great tangible asset. And then if we go into a more draconian situation, it's another very good tangible asset. Also overseas, you're having many central banks increase their stockpiles. I think gold, continues to be a safe haven and a must for people's portfolios.
All right, so you're anticipating those central banks in particular are going to keep adding?
I do. I think when you're certainly seeing some central banks looking at alternative assets like crypto, but I think tangible assets like gold and moving away, unfortunately, from the dollar, I think is happening. So I think gold is going to continue to increase across central banks.
Interesting. I mean, you mentioned crypto there. What is your view on what's going on in that space at the moment?
Yeah, I mean, it's obviously been fueled quite heavily from the new administration here in the United States. I think there's still, nothing goes linearly. I think there'll be pullbacks. I think right now it's hard to fight the positive tailwind. I mean, ultimately, I would have thought we'd come down more. There's so much support for crypto, and there's a lot more positives and tailwinds behind it. Even if you look at the 401k and retirement plans, now being able to invest in these alternative assets is a big deal, and I think that will actually, stabilize the floor here. I don't think we're going to see a major retraction. I think we'll come back, but nowhere near to the levels we've seen before.
So, Brad, overall, you feel as though that bullishness we're seeing in risk assets is likely to continue?
I think so, Andrew. And I think that's the right question. I think there's still a lot of positive dynamics out there. I still think, we're in the very early innings on artificial intelligence. That this is a multi-year cycle that's just starting and has started for just a year or two. I think if you look at the crypto side, there's some positives that will continue to play out right over the next several years. So I think you're right. I think that was a great question, and well worded. I think risk is still on.
Well, let's go to what we're seeing on the equity market at the moment. What are your observations there? Because once again, we're hitting record after record. Interestingly, also, that SmallCap Russell 2000 index also at a highest point since November last year.
Yeah, I mean, and we've talked about this quite a bit. I mean, I've been expecting to see new highs, and we're getting them. There's just a lot of positive news flow, and I think it's hard to ignore what's going on with this technology innovation, and with artificial intelligence. It's just adding this layer where these companies can be so much more profitable with a lot less. And then also, in terms of speeding up some of these transitions, things that used to take quarters to do are going to be able to get done in a quarter. So you're getting these efficiencies, you're getting the benefits of technology, and that's just going to continue to play out. And again, I believe we're in the early innings here. I don't think we're past inning 2 or 3, so I think we still have a long way to go.
Brad, stock specifically, let's talk about Intel. My goodness, the biggest daily gain in about 4 decades, 1987 in fact, jumping 23%. This is after Nvidia said it's going to invest some $5 billion in the chipmaker.
Yeah, I mean, wow, what a what a difference overnight makes. Ultimately, I think if you look at the playbook of investing in where the government invests, you would have done quite well, right? The government takes an investment into Intel, and then just several weeks or a month later, you get NVIDIA making this investment, and the stock pops that 20+%. I think this is a really good deal for NVIDIA. I think ultimately it's a great deal for Intel, but you get a good diversification. This costed NVIDIA nothing, right? I mean, you're a 3 trillion market cap company. Investing 5 billion is like investing a penny for an ordinary folk. So ultimately, this gets some exposure. It gives them some capacity on the CPU side. For Intel, it gets them back in the runnings, and maybe gain back some share on the server side from AMD. But ultimately, I think this is a bigger win for Intel, and the stock reflected that.
Just in regards to Nvidia, of course, we had those reports the previous session that Chinese tech firms have been told to stop buying its chips. That saw the stock drop. I mean, how significant is that?
Yeah, and this is a good point there, Andrew, because I don't think that many people have been focusing that much on this, and it's an important point. I mean, when the Chinese sort of put on hold the purchasing of certain NVIDIA chips, it's a big deal, especially after the Trump administration allowed more chips to be sold into China from NVIDIA. So, there's a lot of cross currents here. I'm a little surprised. I know that NVIDIA, Jensen made a shocking comment, and it is a little shocking. I think this will get resolved rather quickly. Ultimately, it does seem like both countries want to work together. Overseas in China, they do need NVIDIA parts, and I'd be surprised if this lasts a long time. I think it'll be reconciled rather quickly.
Now, elsewhere, Oracle obviously popping more recently. Once again, this is that AI play with its cloud computing. But also, interestingly, look, we've had those negotiations between the US and China over TikTok, and here's Oracle's moved into this space.
Yeah, I mean, wow, look at another company that's performed unbelievably well. We had Oracle stock have a significant move. One, you have the OpenAI $300 billion investment, and then two, $300 billion from OpenAI. And then secondly, you have more chatter that Oracle is going to win the ownership of TikTok. Both of these are significant positives for Oracle. On the OpenAI side, that partnership is significant. Clearly it shows that Oracle is now considered one of the top, I got to put them in the top five on the cloud plays. And, OpenAI, the big question there is how are they going to pay for this $300 billion investment? I mean, the company does around 10 billion a year. So I think you see more, investments into OpenAI. I think they're going to raise money. I wouldn't be surprised if that happens again in the near term. But ultimately, I also expect OpenAI to have more products and to enhance their product portfolio. I mean, they have this massive install base that they've grown faster than anything in history. And I think you might see some new products to be able to monetize that. So, but ultimately, these are big wins for Oracle, and the stock reflected that on both of these news announcements.
So, Brad, all said, what are your favorite AI plays right now?
Yeah, I mean, I still like the mega cap. So if I look at Microsoft, Meta, Amazon, and Alphabet are probably rounded out. Nvidia, I still like. I think they're going to perform well. I would prefer Taiwan Semi at this juncture. I think you're going to get more positive news flow continuing in semiconductors, and that stock is going to continue to benefit. But ultimately, the large cap hyperscalers, I think we're still in the early innings, and we're still going to make record highs across the board.
Brad Gastwirth from Circular Technology. Let's come back home, take a look at where we're likely to get going on the local index, looking for a positive start. SPI futures up around 0.5%. Not a lot of local news to go on, but we did see a rally more broadly on global stocks overnight, so we do have that momentum going into today's trade. Stay with us. We'll get across that in just a minute or two.